Welcome to Finance News Weekly. I'm your host, bringing you the most important market developments from the week of December 5th. This week was absolutely packed with major headlines. We've got Netflix making the biggest media deal in history, the Fed decision just days away, and some fascinating moves in tech stocks and crypto. Let's dive right in. Before we jump into the stories, let me give you the roadmap. Today we're covering U.S. markets and the Fed, big tech developments, media and entertainment M&A, emerging markets, crypto, commodities, and key earnings reports. We've got 20-plus stories to get through, so let's keep this moving. Let's start with the absolute blockbuster of the week. Netflix is acquiring Warner Bros. Discovery's studio and streaming assets in a deal valued at $82.7 billion total enterprise value, with $72 billion in equity value. This is the biggest media deal we've seen in years, folks.
What's Netflix getting exactly? Warner Bros. Film studio and the HBO Max streaming service. Warner Bros. Discovery will spin out its TV networks like CNN and TNT separately. The deal beat competing bids from Paramount, Skydance, and Comcast. Expect regulatory scrutiny given the size and market concentration.
Now let's talk markets. The S&P 500 closed Friday at 6,870, marking its fourth straight day of gains. We're now within 1% of the all-time high set back in October. Tech and communication services led the way, while financials and industrials lagged a bit.
What's driving this rally? Two words: Fed expectations. Markets are now pricing in an 87% probability of a quarter-point rate cut at next week's December 9th and 10th meeting. That would bring the federal funds rate down to 3.5 to 3.75%. Inflation data came in benign, with the PCE index showing 2.8% annual growth, lower than expected.
On the bond side, Treasury yields posted their worst week since June. The 10-year yield climbed about 4 basis points to 4.14%. That's interesting because you'd normally expect yields to fall ahead of rate cuts, but this suggests some lingering inflation concerns.
Let's shift to big tech. Microsoft had a rough week, dropping 2.5% after reports surfaced that the company lowered sales growth targets for some AI products. Specifically, fewer than 20% of Azure sellers met targets for the Foundry product last fiscal year.
But here's the thing. Microsoft strongly disputed these reports, saying they haven't actually lowered sales quotas. And Wall Street seems to agree. The consensus price target is still $629, implying about 28% upside from current levels, around $478. Most analysts rate it strong buy.
Better news for Nvidia. Shares rose 2% this week after US lawmakers dropped the proposed GAIN AI Act from the defense bill. That eased fears about export restrictions on advanced chips. Nvidia also announced partnerships with AWS, Synopsys, and Mistral AI.
NVIDIA is trading around $183, which is still about 20% below its record high of $212 from earlier this year. But analysts remain very optimistic, with a consensus price target of $250.66, suggesting 38% upside potential. The AI chip story is far from over.
Apple is on fire. Shares hit an all-time high of $287.40 this week, currently trading in the mid-280s. That's up 16% since October 10th. The story here is the iPhone 17 supercycle.
Apple's on track to ship 247.4 million iPhones in 2025, which would beat the previous record of 236 million from 2021. CEO Tim Cook said reception for the iPhone 17 was, quote, off the chart. December quarter revenue guidance came in at $138 billion. That's 11% year-over-year growth, crushing analyst expectations.
Quick market flash on other movers. Meta jumped 5% on reports of potential metaverse budget cuts. Salesforce rose 4% on strong revenue forecasts. Five Below popped 3% after beating earnings. And on the downside, SoFi fell 7% after announcing a $1.5 billion stock offering.
Let's talk global markets. Emerging markets are having a spectacular year, up 23% year to date. The MSCI Emerging Markets Index rose 0.2% this week, led by Chinese stocks. Alibaba and Tencent accounted for more than a third of the index's gains.
Why are emerging markets attractive? 4 reasons. First, EM fundamentals are solid with a 2.5% growth gap over developed markets expected in 2025. Second, most EM central banks are easing rates. Third, valuations are attractive. And fourth, EM stocks trade at a record 45% discount to the S&P 500.
Now, crypto. Bitcoin has been volatile, trading in a range between 85,600 and 92,758 this week. That puts it down more than 30% from the all-time high of 126,000 hit in October. Nearly $1 billion in leveraged positions were liquidated during recent price drops. But here's the interesting part. Analysts from Glassnode say this isn't a crypto winter. Bitcoin absorbed more than $732 billion in net new capital this cycle. That's more than all prior cycles combined. The pullback is being driven partly by Bank of Japan rate hike signals, which is unwinding yen carry trades. Commodities corner, oil prices remain under pressure. WTI crude rose slightly to $59.94 per barrel, Brent at 64.02, but both are down about 10% year over year. Saudi Arabia just lowered its January crude price for Asia to the lowest level in 5 years.
The EIA expects global oil inventories to keep rising through 2026, which means more downward pressure on prices. They're forecasting Brent to fall to $54 per barrel in Q1 2026. For investors, this is a headwind for energy stocks, but a tailwind for airlines and transportation.
Earnings highlights. Ulta Beauty raised its full-year sales outlook to $12.3 billion. Stock jumped 6%. Cooper Companies surged 13% on strong quarterly results. On the downside, Hewlett-Packard Enterprise missed revenue expectations at $9.68 billion versus $9.94 billion expected.
Small-cap stocks hit fresh highs this week. The Russell 2000 rose nearly 2% in a single session and hit a new closing record. Small caps tend to benefit more from Fed rate cuts since they're more sensitive to borrowing costs. This is a positive signal for broader market participation.
One more thing on central banks, the ECB kept rates unchanged at its October meeting. Deposit facility at 2%, main refinancing at 2.15%. Markets expect rates to stay on hold well into 2026, with the first cut possibly coming in July. Eurozone inflation is stabilizing near the 2% target.
Looking ahead to next week, all eyes on the Fed decision December 9th and 10th. We're also watching Oracle earnings, which are expected to show 11.6% earnings growth on 15.2% revenue growth. Keep an eye on any economic data releases that could affect the Fed's decision or their forward guidance.
All right, let's wrap this up. This week, we saw Netflix make the biggest media deal in history. Markets rally ahead of the Fed's expected rate cut. Mixed signals from big tech, strong performance in emerging markets and small caps, and continued pressure on crypto and commodities. The key theme? Markets are optimistic on Fed easing, but watching for any surprises in the policy statement.
Thanks for watching Finance News Weekly. If you found this helpful, please hit that like button and subscribe for more market coverage every week. Drop a comment letting us know which story you found most interesting. Stay informed, stay invested, and we'll see you next time.